The Federal Reserve has two choices right now: cut rates and risk inflation running hotter, or keep rates high and let the economy keep bleeding. Both of these doors lead somewhere bad, and oil just made sure of it. Right now, the Fed is being trapped because the economy is being squeezed from both sides. Oil and gas prices are pushing inflation higher, but the economy is also showing signs that businesses and people need relief from high interest rates. As housing is weak, borrowing is expensive, and the job market is not as strong as it was. Jerome Powell has pointed out that job gains remain low and labor demand has softened. So even though the economy is still growing, the pressure from higher rates is becoming harder to ignore, and that puts the Fed in a very uncomfortable position. At the Fed's latest meeting, they left interest rates unchanged, and Powell's message was basically that the economy is still holding up, but the picture is becoming much more complicated. Powell said inflation has moved up and remains elevated. Total PCE prices, which measure how much prices are rising across consumer spending, rose 3.5% over the year, boosted by the significant increase in oil prices. If inflation keeps moving the wrong way, the Fed has less room to give the economy relief. And cutting rates too soon could make inflation harder to control, especially whenever oil and gas prices are already pushing higher. Now the Fed has to ask a different question. Is inflation really under control, or is this the beginning of another wave? Gas is one of the fastest ways inflation becomes visible in everyday life. Most people are not tracking the inflation data or Fed speeches, but they know whenever filling up their car suddenly costs more. People feel whenever their paychecks are not stretching as far. And that's why energy inflation can become such a powerful problem. It changes how people feel about the economy. And whenever people start believing that inflation is coming back, the Fed has to take that seriously. But the oil story is not simply that gas got more expensive. Oil markets are reacting to the US-Iran conflict because that conflict raises fear around one of the most important energy routes in the world: the Strait of Hormuz. The Strait of Hormuz is a narrow waterway between Iran and Oman, and it's one of the most important oil choke points in the world. According to the U.S. Energy Information Administration, 20.9 million barrels of oil move through the Strait of Hormuz a day, equal to about 20% of the global output. Right now, the Strait of Hormuz is not completely shut down. Some ships are still getting through, but traffic has become limited, heavily controlled, and risky. That's why the market reacts so quickly. Oil prices do not just move whenever supply is lost. Oil prices also move whenever people believe that future supply is at risk. If there's a chance that tankers could be delayed, insurance costs could rise, shipping routes could become more dangerous, or countries can respond with new restrictions, that risk can be priced into oil before the worst case scenario actually happens. It's not just about the price you pay for gas. That's just the most visible part of a much larger chain reaction. For most people, the result is simple. The economy feels more expensive and less flexible. Gas costs more, debt stays expensive, and the possibility of cheaper money gets further away. The real problem is where this inflation is coming from. If inflation was coming from too much spending, the Fed has tools for that. It can keep rates high, make borrowing more expensive, and slow demand. But if inflation is coming from oil prices, shipping risk, and global conflict, the Fed is dealing with something much harder to control. Oil inflation can push prices higher while making consumers weaker at the same time. Gas takes more out of people's paychecks, and businesses start to face higher transportation costs. If the Fed cuts rates, it could help the economy breathe, but it risks making inflation harder to control. If it keeps rates high, it might help fight inflation, but how much pressure can the US take? Thank you so much for watching. If you enjoyed the video, make sure to leave it a like and subscribe. It would mean a ton to me, and have a great rest of your day. Thank you.